And you know what? $3,000 isn't a number that excites me at all. I wouldn't own as much gold as I own if I thought it was going to go from $2,700 to $3,000. I own it because several times in my life, it's gone up fivefold or sixfold or sevenfold. I don't own it because I hope it's going to go to 3,000. I own it because I'm afraid it's going to go to 9,000.
You're watching Silver News Daily. Subscribe for more.
Rick Rule, one of the most respected voices in the investment world, has made a bold claim. Silver is not just undervalued, it's vastly undervalued and poised to deliver extraordinary returns. You might think, sure, but what's so special about silver? Well, what if I told you that a massive supply deficit and an explosive demand from green technologies could catapult silver to levels we've never seen before? It's not just speculation. It's happening now. Stay with me, because in the next few minutes, we're uncovering why experts believe this is a once-in-a-lifetime opportunity you simply can't afford to miss.
I think we're going to go reasonably slow with regards to conventional reactor adoption in the United States. What is happening in the United States is that planned shutdowns are being scrapped. The growth in near-term uranium demand is a function of the continuation of Japanese restarts and the incredible pace of Chinese reactor construction. Certainly, we are going to see increasing utilization of uranium regionally and globally, but that isn't going to impact demand for 6 years or 7 years. The near-term impacts on demand are going to be the extension of existing plants that were slated for shutdown, the Japanese restarts, and as I say, the incredible pace of new plant construction, particularly by the Chinese. Looking further out, there's a whole different part to his question, which goes to technology. To the extent that fusion technology ever became possible, it's only worked at a bench scale so far. That would reduce uranium demand fairly substantially. It would be wonderful for humankind, but it would be lousy for the uranium industry. Another thing that would be lousy for the uranium industry and humankind would be, and we have to keep this in the back of our minds, the repeat of a Fukushima or 3 Mile Island circumstance, which is to say a plant disaster, which would shut down very, very, very quickly the wonderful groundswell of political support for the uranium industry. The other side of technology is all wonderful for uranium. The adoption of small modular reactors, negating a bunch of the upfront capital cost. The probability that very small reactors could be used in shipping. When people say this is something in the future, the U.S. Navy, which has 40-something of these reactors in place, says, really? This future was 30 years ago for us. So in that sense, there's a very bright future for uranium. It's important to know, though, that that future is 6 years from now, 7 years from now, 10 years ago. The net present value of that demand at an 8% discount is zero.
Let's start with where silver stands today. Despite its historical significance and industrial value, the silver market has been struggling. Prices have faced stiff resistance near the $1.30 mark, and higher interest rates are weighing down demand. Analysts point out that the market seems stuck around the 200-day moving average, a key technical level traders watch closely. So why are these challenges important? Because they've created a unique environment, a combination of skepticism and opportunity. While many investors hesitate, Rick Rule sees the undervaluation as a setup for an extraordinary reversal. Could this resistance be the calm before the storm?
Goes below zero, not infrequently now, which is to say that the producers have to, if it's legal, flare it, and if it's not legal, literally pay somebody to take it and store it. So the circumstance that the questioner asks is a real one, not a hypothetical one. And I can't tell you when that's going to be over. What I can tell you is that high-quality U.S. gas producers like Devon, like Equitable, are dealing with this. The stocks are stupidly cheap, even at current prices, with regards to the cash yields that they're generating. There are literally billions of dollars spent every month on gas gathering, gas storage, gas transmission, and gas liquefaction plants. There was a de facto ban on new gas liquefaction in the Biden government on the Eastern Seaboard. No legislated ban. There was just a go slow. My suspicion is that one aspect of a Trump administration will be the absolute end of a go slow regulatory environment with regards to oil and gas transmission and gas liquefaction on the East Coast. This won't impact gas demand for probably 3 or 4 years. But when it does impact gas demand, I think it impacts it with an absolute bang. The second thing that's happening right now is the radical movement of, in particular, German industry, gas-dependent German industry from Germany to the U.S., to the Gulf Coast, to the Eastern Seaboard, to take advantage of U.S. natural gas. Finally, with regards to natural gas north of the border in Canada, it would appear that the Canadians have decided to thank and excuse their prime minister. This gentleman inexplicably sees no business case for natural gas, I guess because he wouldn't allow it. To the extent that the Canadian voters thanked and excused him, I think that you would see an immediate debottlenecking of Canadian natural gas. The end of Prime Minister Trudeau and the possibility of a more gentle regulatory environment with regards to transmission in the U.S. should be extremely bullish for Canadian natural gas, which is even cheaper than American natural gas.
To understand why Rick Rule sees silver as an exceptional opportunity, we need to examine its current valuation, or rather, its undervaluation. Silver isn't just a precious metal. It's an industrial powerhouse used in technologies ranging from solar panels to electric vehicles. Despite this, its price doesn't reflect its dual purpose. In fact, compared to gold, silver often trades at a significant discount. Historically, the gold-to-silver ratio averages around 6:1, but in recent years, it's ballooned to 80:1 or higher. This imbalance highlights just how cheap silver is relative to gold. But why does this matter? Because silver tends to outperform gold in bull markets. It's more volatile, yes, but that volatility can work to your advantage when prices rise. Think about this. During previous precious metal surges, silver's price has multiplied several times over, outpacing gold's gains significantly. Rick Rule has often emphasized that silver is the investment of choice to those seeking leverage against economic uncertainty. And there's another layer. Compared to other assets, silver is undervalued even as a commodity. The price of consumer goods has skyrocketed. Just compare the cost of a simple drink like a Diet Coke to an ounce of silver, but silver hasn't kept pace. It's a metal with irreplaceable industrial applications and a role as a hedge against economic turmoil, yet it's trading at levels that don't align with its utility or demand. This undervaluation creates an opening for savvy investors. The current skepticism surrounding silver, largely due to short-term factors like interest rate concerns, has kept its price subdued. But Rick Rule and other experts argue that this hesitation is precisely what creates the buying opportunity. They see silver not as an overlooked commodity, but as a coiled spring ready to unleash exponential growth. So the question is, do you see silver as undervalued, or are you waiting for the rest of the market to catch up? Rick Rule believes the time to act is before the crowd realizes its mistake. What's your take?
Great discovery, but it's small. I like silver discoveries. Well, I like silver deposits in the 100 million ounce range. What I've learned in my career, sadly, is that small mines can only make me small money, but they have big risks. Big mines, while they have big risks, can make me big money. So I don't follow that company particularly well, and likely will not unless I see the possibility that it exceeds 100 million ounces in measured, indicated, and inferred resources. What the questioner says with regards to the grade is true, although he needs to know that those Walker Lane deposits, those epithermal deposits, are often very narrow veins. And so the mined grade might vary a lot with the reported widths, the grade and the reported widths, because you'll have to take a lot of wall rock to get at those narrow veins. Well, the Saudi budget includes an awful lot of diversion for social spending. You need to understand that. You're not talking about the Saudi Aramco budget. You're talking about the oil price that is required to sustain the Saudi state on top of production. The Saudis' discovery cost and lifting cost is very low compared to Exxon's discovery and lifting cost. But Exxon isn't similarly burdened by that very large state, although it would be interesting to hear what role they play ultimately in funding the U.S. budget. I suspect that at the current cost of capital, that Exxon's real operational cost in the Permian Basin is less than that. The $60 number, I suspect, correctly layers in the cost of capital and the allocable share of Exxon's overhead, which goes to the Permian Basin. But I suspect that the true operational cost in the Permian Basin, before general and administrative and before cost of capital, is substantially lower than $60.
Now, let's explore one of the most compelling reasons Rick Rule is bullish on silver, the supply-demand gap. The numbers are staggering. In 2024 alone, global silver production increased by just 2%, while demand surged by 7%. This imbalance has resulted in a supply deficit of 182 million ounces, the fourth consecutive year of undersupply. Think about that. 4 years of demand outstripping supply, with no major mining projects on the horizon to ease this shortage. This deficit isn't just a minor hiccup, it's a structural issue. Silver is an essential component in industries like renewable energy, electronics, and electric vehicles, industries that are rapidly expanding. For example, silver is a critical material in solar panels, which require significant quantities to function efficiently. As countries push for cleaner energy solutions, solar panel production is projected to skyrocket, further driving up demand. Electric vehicles tell a similar story. As automakers race to electrify their fleets, silver is indispensable in their production. Its conductivity, durability, and resistance to corrosion make it unmatched for applications in EV batteries and charging stations. The green energy revolution isn't just a future trend. It's unfolding right now, and silver is at the heart of it. But here's the catch. Mining silver isn't as simple as ramping up production overnight. New mining projects require years of exploration, development, and significant capital investment. With no major discoveries in sight and existing mines facing declining yields, supply simply can't keep up with the growing demand. This is where the opportunity lies. When supply constraints collide with surging demand, prices don't just rise, they surge. Rick Rule has emphasized that this kind of imbalance is a classic setup for a price breakout. The question is, as industrial demand keeps climbing and the supply shortfall worsens, how long before the silver market reflects this reality? The smart money sees this gap as a signal, a chance to get ahead of the curve before prices catch up to the fundamentals. What do you think? Could this supply-demand gap be the catalyst for the next silver bull market?
March or April of 2025, we have a letter of intent in place to buy a small bank with a national charter. We need the change of business plan to be approved, but importantly, we don't need that to be approved by the FDIC. We need it to be approved by the Office of the Comptroller of Currency. They are the tough regulator, but last time they approved our application in 97 days, while the easy regulator, the FDIC, was 2 years, 7 months and counting. So, hopefully, the vaults will not be battle bank vaults. We will store customers' physical precious metals, whether they store the gold with us or with their dealers, and we lend against it, in vaults owned by publicly traded companies so that we can audit their balance sheet and their income statement to make sure that the vaults offer secure delivery. At present, those vaults would be Brinks, Loomis, or Viamat. There are doubtless other vaults in the world that are worth doing business with, but out of an abundance of caution, if I can't see the vaulting company's balance sheet and income statement, and if I'm not assured that they don't follow best practice audit for their inventory, I have no interest in risking your bullion or my collateral.
Let's shift our focus to another crucial aspect of silver's appeal, its role as a hedge against inflation. Historically, silver has been a trusted store of value during times of economic uncertainty. But it's not just silver's reputation that makes it compelling. It's how it performs during periods of rising inflation that sets it apart. In the 1970s, for example, when inflation soared to double digits, silver prices surged more than tenfold. Fast forward to the 2008 financial crisis. Silver prices skyrocketed from around $10 an ounce to nearly $50 in just a few years. Why? Because silver, like gold, acts as a safe haven when traditional currencies lose their purchasing power. But unlike gold, silver's volatility often amplifies its gains during these periods, offering outsized returns for those willing to ride the waves. What makes today's economic climate particularly interesting is the combination of factors at play. Inflation has been a persistent concern, fueled by record levels of government spending, supply chain disruptions, and geopolitical tensions. Meanwhile, central banks around the world continue to signal cautious monetary policies, creating uncertainty in traditional investment markets. Rick Rule and other experts argue that this is precisely the kind of environment where silver shines. But here's the twist. While inflation protection is a well-known aspect of silver, many investors underestimate how quickly it can respond when market sentiment shifts. Rick Rule often points out that silver is a lagging performer compared to gold in the early stages of a bull market. However, when silver finally moves, it tends to move explosively. This delayed reaction creates an ideal entry point for investors who understand the timing. Consider this. With the U.S. government's debt-to-GDP ratio at record highs and off-balance sheet liabilities surpassing $120 trillion, the dollar's long-term stability is anything but guaranteed. These macroeconomic pressures aren't just theoretical, they're happening now. Silver's combination of industrial utility and monetary appeal makes it a unique asset in protecting wealth during such volatile times. The real question is, will you wait for silver's price to reflect these inflationary pressures, or will you seize the opportunity to position yourself before the next surge? Rick Rule's track record of identifying these trends suggests that waiting could mean missing out on one of the most significant opportunities in today's market.
Well, I said North American natural gas, although you can't buy it physically. And I'm, as you know, Duncan, I'm an unconstrained gold bug. I would suggest that people have at least 5% of their net worth in physical gold. And I would suggest that they hope it goes down in price. The set of circumstances that causes your gold to go up rapidly in price, which I think we're likely to see, are invariably fairly unpleasant. But certainly if silver is cheap, gold is cheap too. Gold generally moves before silver does, although silver, when it moves, generally moves further and faster. If the question goes to holding physical commodities as opposed to holding equities around physical commodities, the most convenient to hold and store are gold, silver, and platinum and palladium. The scope of Battle Bank with regards to international diversification will simply be in currencies. We will allow U.S. depositors to bank, which is to say buy certificates of deposit, in 20 currencies, not just the U.S. dollar. In our prior effort at Everbank, that was an $8 billion product. One of the interesting byproducts of that has been for first-generation Americans, immigrants, who do business both in their country of origin and in the United States. The ability to bank in both currencies was very useful. And we have the ability to facilitate transfers from, say, Australian dollars to U.S. dollars or U.S. dollars to euros, assuming that somebody banks with us in both currencies, very cheaply. Those services are provided by the large chartered banks too, but at 4 times the price, the function of time. a few things get in the way of Exxon in the near term. One would be improved prospects for peace in the Middle East. I think there is a bit of political risk premium built into oil. The second would be peace in the Ukraine. Both of those are bigger than me. I'm a credit analyst, not a political analyst. The third would be the threat of recession and depression. A global economic slowdown means that you can have supply shortages if you have a demand shortage, and the price doesn't have to move. If one is prepared, as I am, to hold Exxon for the rest of one's life, I'm 71 years of age for the record, almost 72, then you don't worry too much about near-term perturbations in price. Note, too, that some of the pain of holding the stock is taken out because of its generous and rising dividend.
Silver's story wouldn't be complete without examining its vital role in the green energy revolution. This isn't just a trend. It's a global transformation. And silver is at the heart of it. As the world races to combat climate change and reduce carbon emissions, industries are leaning heavily on renewable energy technologies, and silver is indispensable to these efforts. Take solar panels, for instance. Each panel requires a substantial amount of silver for its conductive properties, making it an irreplaceable component. As countries accelerate their transition to renewable energy sources, the demand for solar panels has skyrocketed. In fact, projections show that solar energy could absorb a significant portion of the world's annual silver supply by 2050. This isn't speculation. It's a measurable shift that's already underway. Electric vehicles, EVs, are another game changer. Silver is critical in EV manufacturing, from batteries to circuit boards and charging stations. With governments offering subsidies and incentives to promote EV adoption, automakers are scaling production to unprecedented levels. Every new EV roll-in off the assembly line increases the demand for silver, creating a feedback loop that reinforces its necessity. But the green energy boom doesn't stop there. Innovations in battery storage, wind turbines, and energy-efficient appliances all rely on silver's unmatched conductivity and durability. Rick Rule has highlighted that while these advancements are essential for the planet, they also create an immense opportunity for silver investors. The metal's dual role as both an industrial necessity and a monetary asset makes it uniquely positioned to benefit from this shift. Here's the kicker. Silver's current price doesn't reflect this explosive demand. The market's focus on short-term obstacles, like interest rates and technical resistance, has overshadowed these long-term trends. This disconnect creates a window of opportunity for those who can see beyond the immediate noise. So, as the world embraces a greener future, one question remains: will you position yourself to benefit from the increasing reliance on silver? Or will you let this transformational moment pass you by? Rick Rule's insights suggest that silver's role in the green revolution is only beginning to be appreciated, and the time to act is now.
No idea about very soon. And you know what? $3,000 isn't a number that excites me at all. I wouldn't own as much gold as I own if I thought it was going to go from $2,700 to $3,000. I own it because several times in my life, it's gone up fivefold or sixfold or sevenfold. I own it because the net on-balance sheet and off-balance sheet obligations of the U.S. government exceed $120 trillion. And those obligations, both on and off-balance sheet, annually exceed the gross income of the federal government before expenditure. That's why I own gold. I don't own it because I hope it's going to go to 3,000. I own it because I'm afraid it's going to go to 9,000 or 10,000. I think that the framers of the Constitution, on balance, did a good job, particularly with regards to the Bill of Rights. You will notice that politics triumphed then, too. Those rights were not extended to indigenous Americans. They were not extended to African Americans. They were not even extended to women. Some people would argue that that's wise. I'm not one of them. I think, I'm guessing, I wasn't there, despite the appearance that I was. I suspect that the framers of the Constitution, particularly the people who inserted the Bill of Rights, would have preferred that the rights that they enumerated were universal. But that's not the way politics works. I should mention, we have a database now. We follow over 800 companies. And when I say we, it's we. I grade the portfolios, but we have a team that maintains this database. All you do is you go to ruleinvestmentmedia.com and you list your natural resource stocks. If we follow them, we will assign a ranking, 1 to 10, 1 being best, 10 being worst. We will comment on individual issues if we think our comments have value. There's also a question and comment section where you can ask more specific questions, and if they're questions that we believe we can answer, we will answer them. Once again, ruleinvestmentmedia.com. List your natural resource stocks, absolutely no charge, absolutely no obligation. Please, please, please. No crypto, no tech stocks, no pot or psilocybin stocks. Just natural resource stocks.
Let's now explore the role of global geopolitics and how it impacts silver prices. Precious metals, including silver, have long been viewed as safe haven assets in times of political and economic uncertainty. This relationship becomes especially crucial when the world faces disruptions that shake confidence in traditional markets. Take the ongoing geopolitical tensions, for example. Conflicts in regions like Ukraine and the Middle East have created significant instability in global markets. These events don't just affect oil and energy prices. They ripple across economies, driving investors toward assets perceived as safe havens. Rick Rule has emphasized that in such scenarios, silver often mirrors gold in its behavior, gaining appeal as a secure store of value. But it's not just geopolitical conflict at play. Central banks around the world, particularly in emerging economies, are stockpiling precious metals to diversify their reserves away from the U.S. dollar. While gold typically dominates these reserves, silver indirectly benefits as its price correlates with gold and often rises when gold does. This dynamic is further reinforced by fears of a weakening dollar, spurred by the U.S. mounting debt and the Federal Reserve's cautious approach to monetary easing. And then there's the role of global trade. As nations implement policies to strengthen domestic industries, particularly in green energy, silver demand is further amplified. Trade agreements or disputes can directly influence the supply chain for critical metals like silver, making its price highly sensitive to international relations. All of this contributes to silver's volatility, but also its potential for explosive growth. Unlike other commodities, silver's dual identity as an industrial and monetary asset makes it uniquely positioned to respond to both geopolitical shocks and global economic trends. As Rule points out, this makes it not just a hedge, but an opportunity for growth in a turbulent world. So here's the key takeaway. With rising geopolitical risks and growing demand from nations rethinking their economic strategies, silver's potential as a safe haven asset has never been more compelling. Do you see the global uncertainty as a threat, or as an opportunity to invest in an asset with a proven track record of resilience?
Interesting question, and I need to begin my answer by saying I don't know, but I'd like to discuss it. The gold and silver price is nominally, at least, as is suggested, set by the LBMA and the COMEX. It's important to note that most days, the futures market in precious metals trades over 100 times the amount of gold and silver available for physical delivery. To the extent that increasing amounts of physical gold in particular are removed from access to COMEX, you set up a circumstance where perhaps ultimately the tail stops wagging the dog. I'm not saying for sure that's going to occur, but I think it's a very interesting circumstance. And it's interesting to note, too, that when that happens, many people who suggest the inevitability of, pardon me, the inability of that to become a problem forget the fact that in order to settle COMEX or LBMA obligations, The physical gold and silver has to be good delivery, which is to say all the scrap gold and silver, all the gold and silver outside the system, all the gold and silver held by the Indian peasantry, can't automatically be used to fulfill those obligations. It needs to be often re-refined, re-assayed, and entered into good delivery. So the circumstance where the continued warehousing of gold by foreign central banks begins to disrupt the availability for good delivery in a market where 100 times the amount held for good delivery trades every day becomes an increasing challenge. I would tell people, too, that one of the reasons why you should hold your physical gold and silver in system available for good delivery is that very often if you're engaged in midnight gardening, which is to say if you hold the gold and silver yourself in your backyard and you want to take advantage of price movements, short-term price movements, you need to reintroduce that gold or silver into the system. I'm not suggesting that there aren't other reasons to have physical gold and silver in your possession as opposed to in system. But if you are using it as investment liquidity, it's important that you have some in system where it actually is liquid.
Now, let's bring everything together and focus on why hacking now is so critical. Rick Rule's insights highlight a silver market poised on the edge of a transformation, a once-in-a-generation opportunity that demands attention. With the combination of undervaluation, a growing supply-demand gap, increasing industrial reliance, and geopolitical uncertainty, the case for silver has never been stronger. Yet, despite these compelling factors, many investors are still hesitant. Why? Because short-term market challenges like rising interest rates and technical resistance cloud their judgment. But this hesitation creates an opening for those who can see the bigger picture. Rick Rule has often pointed out that markets reward early movers, not those who wait for the crowd to catch on. Consider this: the current price levels, driven by skepticism and near-term pressures, may not last long. As demand continues to outstrip supply, and the realities of silver's critical role in industries like green energy become impossible to ignore, the market will correct itself, and when it does, it could move quickly and dramatically. So what's holding you back? Are you waiting for silver to surge before you act? History shows us that waiting can cost you. Rick Rule's track record of identifying undervalued assets is a testament to the rewards of being proactive. This is your chance to get ahead of the curve, to position yourself before the rest of the market realizes what's happening. What will you do with this opportunity? Will you seize it, or let it pass by like so many investors who wait for certainty in an inherently uncertain market? The time to act is now.
I believe it's January 11th, if my memory serves me well. Thank you. Albert Liu does things like that. I just show up when I'm told. Now, I think a lot of your listeners have attended our boot camps. But for the benefit of those who haven't, the boot camps are 8-hour-long live deep dives that are broadcast online. 8 hours around one topic. We've done uranium, we've done silver, we've done development, we've done a lot of things. It's important to note at the beginning that these are not entertainment products. If you're the kind of person who used to buy the newspaper for the funnies, these are not for you. When I say deep dive, we pack a lot of information in 8 hours. Some of the words that are used, you are probably going to have to Google or Wiki. We don't talk down to our audience. And when I say 8 hours, that's the down payment. We're going to give you more information in 8 hours than you can absorb in 8 hours. So after you've listened to it for 8 hours, you're going to have to rest. And then you're going to have to listen to it for another 8 hours. And likely, a month out, you're going to have to refresh your memory and listen to it for another 8 hours. So if you aren't prepared to donate 24 hours of your life to learning a lot about gold, please don't come. Please don't come for two reasons. I don't like disadvantaging my audience. I don't want to cause harm. I want to do good. Also, don't come because for 28 years in my educational products, I've offered an absolute ironclad money-back guarantee. If you don't think that the information that we've given you is worth your tuition, you email us and we give you your money back. I'd prefer not to have to give you your money back. Over 28 years with this money-back guarantee, we've had to refund less than 0.1% of the tuitions that we've charged, precisely because we disclaim it so aggressively in the beginning. If, by contrast, you are interested in gold, if you're interested in all aspects of gold, the hows and the whys, a discussion of various forms of physical ownership, a discussion of the surrogates for physical ownership, things like Mokata certificates, Perth Mint certificates, segregated storage, unallocated storage, home storage. We're going to discuss these in gory detail. We're going to talk, too, about byproduct investments by way of securities markets, which is to say senior gold stocks, intermediate gold stocks, junior gold stocks. We're going to cover the waterfront in gold investing in 8 very, very complex, very, very dense hours. If you are or would like to be a gold investor, I suggest that this is invaluable information to you. If you're a tourist, give it a pass.
This is the moment where everything comes together. Rick Rule's case for silver isn't built on speculation. It's rooted in undeniable market fundamentals. The supply deficit is real and growing, fueled by a 7% surge in demand against a sluggish 2% rise in production. The green energy revolution is accelerating with silver's role in solar panels, electric vehicles, and battery storage, making it an indispensable resource. Add to that the growing geopolitical tensions and a global shift towards precious metals as a safe haven, and you've had the perfect storm. Now, let's talk potential. In past bull markets, silver's price hasn't just risen. It's exploded, outpacing gold and delivering incredible returns for early investors. If history is any guide, the combination of industrial demand, supply constraints, and monetary appeal could push silver into a breakout like anything we've seen in years. Rick Rule believes this isn't just a possibility. It's a probability waiting to unfold. But timing is everything. The current market's hesitation, driven by short-term pressures like interest rates, is masking the long-term opportunity. Once the market recognizes silver's true value, the window to invest at these levels will close rapidly. This is the nature of transformative opportunities. They're clear in hindsight, but require bold action in the present. So, what's your move? Will you wait for confirmation and risk missing the upswing, or will you take Rick Rule's advice and act while silver is still undervalued? Remember, this isn't financial advice. It's an invitation to think critically and seize the potential before it's gone. As always, don't forget to subscribe for more insights and updates on market's biggest opportunities.
Yes, many, many, many investors are. It seems that when investors get bitten by the gold bug, they often go whole hog. In my life, when gold has moved, the moves have been dramatic. And if you think of it as I do, as insurance, a fairly small premium goes a long way. If, as an example, you had gold at the beginning of the decade of the 70s, understanding the type of inflation that we would experience in the 1970s, when the gold price moved 30-fold, had you had 10% of your portfolio in gold, you would have enjoyed a triple over that decade on your total portfolio. If you had gone through a much more modest bull market, like the period 2000 to 2010, where the gold price went from $250 an ounce to $1,750 or $1,800, which is to say a 7-fold increase. A fairly small proportion of your net worth in gold would shield most of the rest of your portfolio from the harmful impacts of the deterioration in the purchasing power of the U.S. dollar. Many, many, many people overinsure. Many, many, many people have too much of their assets in physical precious metals or more riskily in penny stocks associated with gold. I should mention, we have a database now. We follow over 800 companies. And when I say we, it's we. I grade the portfolios, but we have a team that maintains this database. All you do is you go to ruleinvestmentmedia.com and you list your natural resource stocks. If we follow them, we will assign a ranking, 1 to 10, 1 being best, 10 being worst. We will comment on individual issues if we think our comments have value. There's also a question and comment section where you can ask more specific questions, and if they're questions that we believe we can answer, we will answer them. Once again, ruleinvestmentmedia.com. List your natural resource stocks. Absolutely no charge. Absolutely no obligation. Please, please, please. No crypto. No tech stocks. No pot or psilocybin stocks. Just natural resource stocks.